Evening, everybody. It's great to be back. I haven't been here for a little while, and there's lots of familiar faces here as well. So it is great to see everybody. One of the things that this evening is, it sort of falls on the heels of our Capital Markets Day that we had yesterday, where we laid out a new 5-year plan. And one of the benefits of that is we've got a few of our other people here as well from the company. Stacey Gunnarsson, who's our head of IR, is here with me. She's from Calgary. Xavier, our manager of exploration, is here from Trinidad. Rhea, the head of our HSE team, is here from Trinidad. And then Scott Budow, our CFO, is here as well. The only danger always of traveling with Scott is that whenever you come to London with your director of finance, everybody thinks you're raising money. And I know in the past that has happened. I'm happy to say on this trip, and you'll see in the presentation, we really made that transition. We're definitely not here to do that on this particular trip, and we'll show you how the company's really changed. I think we've been presenting here for maybe 4 years now, roughly, and I know we had a little break during COVID, but for some of the people that have seen the story, you'll see how it's transitioned since that period of time. And I think the big takeaway from today is this company's now here where we can present to you with a 5-year plan, which is really something I think for a company our size is fairly unique. We talk about how we're now growing and evolving towards what we call a full cycle exploration and development company. I think the part of that we don't have on there is the fact that we're also fully funded now. And that's probably the biggest change from the last time I was here. So we'll talk to you about that a little bit. So the company, it's listed in London, and it's listed on AIM, and it's also listed on Toronto. Head office is in Calgary, and all the assets are in Trinidad. The infrastructure that we now have in place, and this is really the key thing, is we have the ability in Trinidad onshore now, between our gas plants and our oil facilities, for over 42,000 BOEs a day of production. And that's, you know, from where we were 18 months ago, that number was probably about 2,500 BOEs a day of production. So we've now built this big infrastructure out. Part of the biggest change and why we've been kind of laying low is we've been building these 2 gas plants. First gas plant came on last October. The other one came on around the 15th of September, so literally this month. And those are really the 2 game changers. Until we got that done, we wanted to kind of lay low and make sure that we got it done. They're done, so we're pretty excited about that. And I'll show you how those are pretty key to the 5-year plan. One of the advantages of not having done a lot of drilling in our business in the last year and a bit is it's given us a chance to step back. Xavier and James and the team have gone and reevaluated everything we have. And you know, we now have over 205 opportunities, drilling opportunities that we see, and I'll show you those. 24 of those are what we think are high quality exploration opportunities, and then a whole raft of development opportunities, which is a little bit, I think, again, unique, certainly from where we were a couple of years ago. We also think that there's still some ability in Trinidad to expand our asset base. We'll show you what we've done in the last 6 months to do that, and we still think there's some room to go forward on that. There's still some more opportunities there for sure. On the ESG side, you know, we've made some strides. I know that pendulum maybe swung a long ways over where it became a huge focus for a lot of public companies. We've kind of taken more of a middle-of-the-road stance, and I would encourage everybody to take a look at our ESG report that's on our website. I'm not going to delve into that a whole bunch here, but I think it'll give you a real balanced view of our approach to it. One of the big things that comes out of our 5-year plan, right now we're on AIM. We're about 160-70 million pound market cap. We'd like to sometime in this next 5 years move on to the FTSE 250, which means that we think we can get to that 750 million pound exchange. And I see a couple of heads shake at that, but I remind you that when I started coming here, we said we wanted to be the largest onshore producer in Trinidad, and a lot of people did that exact same thing. We are now the largest onshore independent producer in Trinidad. So I'm actually happy to see that. It reinforces the challenge for the team to do that. And I think we'll show you how we can get there. So the foundation that we've got in place now, You know, I think the key thing is, and I just want to talk about Trinidad for a couple of minutes. You know, it's in the up-dip end of the Venezuelan basin. It's about 11 kilometers, I think, from the southern part of Trinidad to Venezuela. These are the best rocks in the world for hydrocarbons. It is the largest oil and gas basin in the world, in the Venezuelan basin. So, you know, obviously there's not a lot going on in Venezuela right now, but the basin itself is really spectacular. And I think that's got to be the underpinning of why we think Trinidad is so good. First oil discovered there in 1908. You know, it's been ongoing for a long period of time. You look at current demand. So they built LNG facilities back there in the 90s. I think they were built in the 90s. And the petrochemical business that's there in place, all the world players are there, Methanex, Nutrien, Promen, all the big petrochemical businesses. Right now, if all of that was running, they would need 4 billion cubic feet a day of natural gas. They only have 2.7 billion cubic feet a day right now. So any natural gas that we find can go into this market that's very, very, very high load factor. Kind of makes it a very unique market in that sense. 2,000 kilometers of pipelines. So, you know, pipelining, getting the product to market, again, not a huge challenge. That picture that just came up in the corner is of an area called Point Lisa's estate. It's where all the petrochemical facilities are. And it really is unique around the world in that it's been around for a long time, lots of capacity. It's right on a port, world prices, near the Panama Canal, means you can ship the product anywhere in the world. It really is unique from that point of view. Opportunities to expand our asset base, we'll show that a little bit. Trinidad's a challenging place to do business. There's no doubt about that. We kind of flip that on the head and say that's also a barrier to entry for a lot of companies. We've been there for 13 years, and we think that we've got a real strong toehold there, and that's why we're going to continue to focus on that. It's a supportive government. We're seeing lots of governments around the world, especially in the northern hemispheres, that are kind of trying to shy away from the fossil fuel industry. I can tell you that this government wants us there. The energy minister is on record as having said we want to get as much out of the ground as quickly as we can. And some days I think the bureaucracy gets in the way of that sort of grand slogan, but it certainly is the underpinning of what's there. And yet it's a well-regulated industry. Good safety standards, good environmental standards. You know, all the big players, Schlumberger, Halliburton, everybody's there. So, you know, it's a good business for us a good place for us to be. That's why we want to be in Trinidad. That's why the story is going to continue to be a Trinidad story. We think we can be a really big fish in a small pond here, and that's what we've been doing. So I talked about this little area that we went from 2010. We had one little block, 143 barrels a day of production, drilled a few wells, did a couple of acquisitions along the way. The first one that we did was a company called Primera in 2011. You can see what we were able to add for the base on there. 2014, and this was really probably a big change. We added that big red block, which is the exploration lands on the east side of the island. There had been some wells drilled on it, but nothing really successful. The team had targeted a different concept, a different type of geological play, so we got that in 2014. And had some success, had some great success, and that's really been the game changer for us. Where we are today with this land position that we now come to you is all this land that you see on this map. The various colors are at various different stages. So the green is the oil producers, the red are our lands, our gas lands. The greens are lands that we're in the midst of swapping with another party, and the gray are some crown lands that we were able to pick up. So when I talk about building our base, that's clearly what you see. I don't think there's going to be any argument that we're now the largest. We have the most mineral rights onshore in Trinidad tied up. So this is why I can talk to you about a 5-year plan, because these aren't a bunch of little blocks. We can kind of really flow the drilling rig through as we go. So that's where we are, 126,000 net acres, and ever since that plant's come on in our new plant, we've been over 10,000 BOEs a day. So it all started with the acreage position. I'm a landman by trade a long time ago, and this is where it all starts. You need that big land base, and then with some drilling success, basically what you do is you add in the reserves. You can see where we're at about 75 million BOEs. This is independently evaluated every year for us. Our target with the drilling program we got in front is to get that over 100 million BOEs a day. And then you can see what this does with production. Start with the land, drill up the wells, and away we go, and you can see those step changes. It's really great because I know both Stacy and Ray have both been with us since we had that 143 barrels a day. So it's been really fun to watch this grow along as we see. So the transformational year this year for us was really a pool that we found about 3 or 4 years ago called Cascadura. We drilled 2 wells on it. Spectacular wells. They're virtually offshore size wells onshore in Trinidad. And we built a gas plant. We've got a bunch of development drilling to do in it. Production right now is about 60 million cubic feet a day and about 1,400 barrels a day. We think that the plant is actually designed to go to 200 million a day. So you can see the step change as we drill, we can bring in production. Give you an idea about that on a cash flow basis. Last year, our cash flow for the entire company was about $4.2 million, $4.2 million. We're now running $4 million a month of cash flow. So when you see that kind of step change, and that's just at 60 million a day, as we start to step that up, you can really see the difference that that's going to make as we go along. These were the first 2 wells that we drilled, as I said, in September. September 6, 2023 was the first gas that we delivered. We've been ramping up the production since then, and we'll continue to do that as we go along. I think we're kind of at a level right now. We'll make sure everything's good with the wells and the plant. As we drill additional wells, we can bring them into the facility. The other thing we want to do is we really want to look at this year, one of the big things we did is we have both Cascadura and our Coho facility that came on in last October. And what those have done is set up a development program. So if I was standing in front of you 2 years ago, it was all exploratory wells. I think a much higher risk company. When we look at it now, we've got all these development wells to drill. So we have these production, development wells, and exploratory wells. I think the risk profiles change pretty dramatically when we look at it. And then I talked about that operational footprint with the deals that we've been able to do, the team's been able to do. We continue to add to the land base, so that's been pretty solid. Daily production now in excess of 10,000 BOEs a day and about 78% natural gas. I talked a little bit about ESG. That's probably been the biggest change for us as we've gone from a 100% oil company to where we're now 78% gas. When we look at emissions and all those other things that get measured in the ESG report, this is probably a pretty easy change for us. So it's been great, but there's things we can do to even improve that, our ESG stuff as well. If there's one takeaway from today, this I think is the key takeaway. We're doing 10,000 BOEs a day, but we got 42,000 BOEs a day of production or of processing capacity. And really what that is it means as we drill now, we can go ahead and tie them in. Ray and the team have done a good job of getting us approvals for the CECs and the EIAs and all those things for this facility. So some of those time lags that we've seen in Trinidad now, all we're going to do is drill to fill everything that we want to do. The 229 identified locations that we've got, I think we have A locations, B locations, and C locations, the A's being the best. And as you kind of grind through those, you start to go to B's. What we find right now in Trinidad with that big a portfolio, and we're going to be drilling 8-10 wells a year, so it gives you an idea how big that inventory is. Every time we drill a well, it just rejuggles that inventory. You learn something new. Some of the A's may fall off the list, but B's will move up to A's. So what you want to do is have a really big inventory that you can move around. And the last one is our presence in Trinidad. We are the largest independent producer onshore. The country is starving for natural gas. So if there's anything we can do to bring that on, we can bring it on quicker than anybody else. The only alternatives for the country now is offshore gas, which is usually a 10-year window. They'd love to do a deal with Venezuela to bring Venezuela gas over to Trinidad. It'd be a great thing if they could do it, but that timeline may be after the end of my career. And I think that's one of the challenges. So onshore, we have this big competitive advantage, especially with the government. I put this picture in of me standing here cross-armed talking to the energy minister. I'm not sure that's the best body language to have, so I may look for a different picture when we're going forward on that. So the long-term plan that we see, we've got these couple hundred drilling locations. We've got 50 sort of high-graded development locations. We've got access to probably 3 rigs. The program we're looking at is really a 2-rig program. Big rig to drill the deep wells, shallower rig to drill some of the development wells. And we think we can add 20,000 BOEs a day from where we are today with that program that we have in place. And as I pointed out, that'll only take us to about half of the capacity that we have for processing capacity. So where that was limited before. So this is our big block. This is the big Ottawa block. And I won't get into a lot of details on this. I'm going to leave lots of time for questions at the tail end here. But the Coho and Cascaduras that you see on there, those are our two gas plants. You can kind of see them here and there. So those are that's the big gas plant. There's a gas plant here. And basically all of these little outlines that you see here, those are individual prospects with names that some of them I had no input into and some of them we did have input into, but we kind of left that up to the team a little bit. But each one of those is basically an individual prospect in what we see with multiple wells into those prospects. Our idea is kind of put a circle around here, and our goal is to drill up everything we can in there and get it into those plants and get that production up. And it's actually a pretty simple model. So Coho's on production, 2 development wells there. Cascadura, we think we're only going to probably need 4 development wells there, but we have 8 of them licensed. We did drill a well over here at Royston, which has had mixed results, probably disappointing results. It was a deep well that we drilled, got oil on the test, but uneconomic rates. We haven't been able to get back in to put it on pump. That'll happen in the next couple of months, and then we'll go back and see about that. So just kind of shows you the suite of opportunities that we have. As far as the operational footprint, there are some other operators in the area that we think it makes some common sense for maybe us to get together at some point here and lower some of the costs with multiple, duplication of some of the services. And then the other thing too is there is more land to pick up in here as we go along. So what's the first kind of stuff we want to do? We want to get that Cascadura facility up from where it's running roughly 10,000 BOEs a day right now to 12,000 BOEs a day. We think there's some technology we can use along the way as well on the existing wells that we have, as well as reprocessing some of the seismic that we have on the lands. Technology is becoming a much more important part of our business. I can even probably give you some interesting ideas on some of the AI stuff that's being used, which is interesting. So short term, we're going to drill those 2 wells at Cascadura, Cascadura 3, Cascadura 2. Never know why the names kind of get the way they are, but it's just a continual drilling program, and the same with Coho to fill up that. And then we also have this exploration wedge on the back end of it. I'm still I'll call myself an old-time oil and gas guy. I still like drilling exploration wells. I think it's where the real value gets added in a lot of these companies. So we've really been able to high grade those exploration opportunities, and we'll continue to use the cash flow from the development side to drill the exploration and continue to build on what we want to do. And these licenses that we picked up are really key in what we want to do on those. So the investment case, we got significant production levels, and really what that means is we got significant cash flow coming out every day. Call it 150 grand a day or whatever the number is right now. And so we're actually able to fund this program now, which is a big change from the last time I stood in front of you. And what that does is it funds the program. Interesting, in Trinidad we have a fixed price contract on our gas, so that means on the gas portion of our assets, it's really really easily predictable stream. So Scott's able to run that through his budget, and on the oil side we get world price less, call it 18%. So we still get the upside of the oil prices, but fixed oil price. So I like to think it's the best of both worlds from our point of view. It's sort of somebody asked about hedging before. It's almost like a hedge on our gas side. We've got 75% of our volume hedged. The other we're letting ride. We've got this inventory of prospects. I've been doing this a long time, 30 some odd years, and I've never seen a portfolio of exploration and development prospects like we now have in this company. And there are some more opportunities to expand the asset base, but let me be clear, expanding that asset base is in Trinidad. We're not looking anywhere else. We think that we can continue to move this along. And then this is a picture of the LNG facility. The beautiful thing here is we can sell everything we got. Every molecule goes down the road, and we can sell it every minute of every day. So it's a wonderful thing. Get paid in US dollars, get paid on the 25th of the following month. So a lot of those risks that you hear about in some of our international operations is out of the market. So that's where we're at there. ESG stuff, again, I'm not going to roll through this, but I think the one real highlight I'd like to point on here is under that social part where we had no lost time incidents. We built 2 gas plants. The last one had over 100,000 man hours, yeah, at the last plant, and we had no lost time incidents. So, you know, I think that's really the most important thing for us, for sure. On the financial side, this is just our last quarter. Our plan on the financial side, we get asked for projections all the time. This is obviously trailing, so it doesn't help us. Our plan right now is let these wells run for a couple of months, and then Scott's going to put together full forecasts middle of December for 2024. It'll have capital budgets in it. It's going to have cash flow in it. It's going to have production in it. And then we'll start to really measure up quarter to quarter. So that's where we're at. The takeaway is the 42,000 BOEs a day of capacity that we can now drill to fill. And a lot of people, I think a lot of shareholders are kind of saw Cascadura coming on as being an endpoint. I actually see it being the end of the beginning for us. We've now matured into a company that has free cash flow that we can use to drill up all of our prospects. It's exciting. It's a great place to be. I'm sleeping better now than I was when we were here drilling exploratory wells, so appreciate that. And that's it. I turned over to questions.
Super. Paul, thank you very much indeed.
No problem.
Okay, questions straight away.
Thank you. You've got a significant amount of debt on the balance sheet. Could you talk about the debt maturity profile and also, given how much rates have risen during the last 12 months, how does that basically affect the break-even rate you might have with regard to the fixed term contracts you have for the gas?
Scott, I'm going to answer this, but Scott, jump in if I get it wrong, okay? So we have 2 different debt facilities. We've got a $7 million operating line, and it's fully drawn right now. We used it to take the plant up. You know, basically at $4 or $5 million a month, our number one thing is we're going to pay that down. We want to get that wiped out as quick as we can. So probably, if we wanted to, between now and the end of the year, we could get rid of that. The other piece of debt that we have, which is $22.5 million, it's got a rate of 7.85% on it, but it's in Trinidad. It's actually based in Trinidad. So we can deduct it against our income. So the effective cost of capital on that rate is 4%, roughly 4%. So it's probably the cheapest cost of capital that we have. We're not going to pay that off early. It gets paid down at $1.5 million a quarter, and it's termed out over the next 3 years, three and a bit years. So that's our plan with the debt. We want to have that operating line that'll just move up and down as we need it to operate the program. And the term debt, we're just going to let it run out because it's really a good cost of capital on it. And there's no, I don't think there's ever on that term debt, that rate is fixed for the term of the loan. So it's not like it renews every year or anything. And what's the rate on the operating line?
It's 7.3% right now.
Does that answer your question?
Yes, and also just with regard to the price for the gas you factored into your cash flows.
The gas price?
Yes.
So the gas price that we have, and you can see it in the last quarter financials, it's $2.20 on MMBTU.
Is that the break-even?
No, that's the actual price we get, but that's right at the wellhead. So there's no processing. There's nothing off of that. And to give you an idea what that price would equate to is that would be about the same price as $3.50 Henry Hub. So that's about, so it's a premium to Henry Hub right now. Give you an idea, it goes up by 2% a year for the first 5 years, and then we can renegotiate the price after that.
Gentleman here, please. Then we'll come to you.
Following up on that last point about the gas price, when the fixed gas price contract, does that end relatively soon, or is it just you renegotiate that every year?
So the way the fixed price contract is it's just on the Oratois block, so it's only gas on the Oratois block. It's for the term of the block, so we basically assigned all of the gas to them. The price is fixed for that first 5 years, and then you renew the price you renegotiate to a new price after the 5th year. But any of the other gas that we find on any of the other blocks, even though it may come into Cascadura or Coho, if it's not on the Oratois block, we'll go back and get a new contract. And I think that pricing would be different than where this deal got. I mean, this deal negotiated in the middle of COVID, where we had some pretty low prices, but we needed the contract in order to get the money to build the plant. So we were in a bit of a tough situation there.
Okay. And my other question was regarding your share price. How does it correlate to oil and gas prices? I mean, if you look at a lot of the other energy companies, they tend to, have a relatively strong correlation to oil and gas. So.
We still follow the AIM. Like if you look at the energy index on AIM, we still seem to follow that, fairly closely. We've outperformed it mainly because of the exploration success that we've had. But I don't think on the commodity side, the market fully understands that fixed price contract. We get penalized when the Russian war started. Gas prices went way up and everybody went, geez, you should go renegotiate the contract. Now everything's fallen back down, certainly on the Henry Hub side, and we're getting in excess of that, and we haven't seen a share price adjust. So I think in answer to your question, the share price is going to be more related to the next couple of quarters. People need to get comfortable that the volume we're projecting and the cash flows I'm talking about right now are real, right? It's just such a huge change from where we were. It's almost unbelievable. So I think we need to get some believers into what we're doing.
Gentleman at the back, please.
You said that you're going to try and pay down that $7 million loan. Yeah. Obviously, that's coming out of your sort of $1 million a week worth of cash flow. Yeah. How quickly are you looking to pay it off, and what's the likely impact that will have on financing new drills?
Yeah. When I say Peter, I apologize. We could if we wanted to. If we wanted to allocate all the capital to that, we could. We're not necessarily going to do that because we do want to start the drilling program again, right, as quickly as we can. So it's not like grind that down and away we go. I think what we really want to see is we want to get comfortable, and I have to say here right now I'm pretty damn comfortable that everything's going as planned at the plant with the wells. Let everything run. And then once we're comfortable with that, then I think we can figure out where we want to go on that. We want to get back and drill those wells as quick as we can, right? We've got a drilling rig sitting there over the lease. So I know it's kind of a bit of a wishy-washy answer, but it's really a day-to-day with Scott and I to say, okay, when are we comfortable enough? Let's figure out where the best cost of capital is. Is it a better cost of capital for us to pay down that line, or is it a better cost of capital for us to get back in the field and drill wells? So.
Question here, please. Yeah.
I wonder if you could just comment on the political background and stability or otherwise of Trinidad. Latin America isn't typically known for its stability, and where you've got all of your crops in one field, so to speak. Do you see that as a risk?
Yeah, I think there's no doubt it's always a risk when you have all your assets in one country. But I think when you look at the political stability in Trinidad, it's it's basically based on the British system. It's British law. It's both of the parties want the oil and gas business. Like, it's the key industry in the country, and they're actually both encouraging it. They both accuse each other of not moving fast enough to get things done in the energy space. So, and we've had both governments. Like, there's basically two parties in Trinidad. We've had both parties while we've operated there, and I would argue that the party that's in power right now is probably the least friendly, and they're still very friendly for what we're doing. So I don't think that's the case. They have elections every 4 years, upper house, lower house. So I think from that point of view, it's English language, British law. Although English language, when I get out in the field and start talking to the field guys, I have no idea what they're saying. I'd have a hard time being convinced that's English. But I think from a stability point of view, I think it's pretty good. Like, if you look at Colombia, is a good example of what you talk about, how the government shifted, and we just have not seen that anywhere in Trinidad. It's just not an issue. Both the governments are literally critical of each other for not helping out the energy industry enough. So that's why we want to be there. It's another good reason why we want to be there.
An extension of that, Paul, what's the tax regime and how stable is this?
So the tax regime is probably the biggest negative in Trinidad. They have royalties. Basically, we pay royalties on the production, and then there's a 55% corporate tax if you want to oversimplify it. but you can deduct a bunch of things off of that 55 when you get there. The unfortunate thing is it's very stable. We keep trying to negotiate to make changes to it, and we haven't had a lot of luck. But we've spent quite a bit of money on capital, so right now we're able to use those big tax pools that we have to offset that. So like at Cascadura, for instance, it's 12.5% royalty, which isn't bad. If you can keep away from that 55% corporate tax, that's really where the difference is.
Any other questions for Paul, please? I've got quite a few here. Just starting off, as you mentioned, you've been doing these presentations for a few years, and I was wondering, on reflection, what's been, over that time, the greatest challenge that you faced, and similarly, kind of what do you feel of greatest success?
Yeah, I think the biggest challenge has been trying to pick dates of when things were going to come on. I think that's been the toughest thing, right? I've stood up here and said we're going to be 6 months, we're going to be 8 months, and it's ended up being a year and a half. That's probably been the biggest challenge for us, and it's just nothing onshore Trinidad's been built like this in the last 20 years. So we had an idea of what was going to happen, and it took longer. We needed more approvals, we needed more things, we needed this, we needed that, and I think that's simply the biggest challenge. I'll take a lot of the responsibility for that, but a lot of it was we needed to keep the pressure on the governments and getting all the approvals. So there was this balance of you couldn't pick too far a date because everybody would work to that date. But then when I picked something that was too close, we'd miss the date and shareholders would get disappointed. I think somebody asked me about share price. I think that's probably, there's a pretty big credibility gap right now for us on when we said things were going to happen, they didn't happen. And that's why I say we need to wait for a couple of quarters here to prove to everybody it's working out the way we want it to work out.
And the greatest success, do you think, in that same time?
Pardon me?
Greatest success, sorry.
Well, there's no doubt the greatest success has been drilling those exploratory wells. Like, I've been doing this a long time, and I've never seen 2 wells that we drilled like that. Like, that first well, AOF'd like 400 million a day. And it really drove it home when we did a tour of that Point Lisa's petrochemical plant. The National Gas Company was taking our board of directors around down there, and they pointed at one of these huge Methanex plants that makes methanol. And they said, your 2 wells run that plant. That plant uses 60 million cubic feet a day of gas. And Methanex had 2 plants, only one was working, and they were going to be able to open up this other plant because of our 2 wells that we had. And that just, it was just like, it's unbelievable. So, yeah.
Sure,